Good morning, everyone. This is Mihai from tipcenter.com. Sound test. We're doing a sound and video test first. Adinda, can you let me know if everything is all right for recording? Sorry, guys, for these 2 minutes delay. All right, we have sound and video. I'll try to move this window a bit more to the left, so we'll have more space for the charts. All right. Thank you, Mike. All right, we're all set then. We can get started. For those of you guys new to the session, we're doing a top-down analysis on pound dollar and pound yen. Hi there, Maud. And we'll be looking directly at the rainbow chart. Since I usually don't have much time left for pound yen after analyzing pound dollar, I figured we might just as well do everything directly on the rainbow charts. Like this, hopefully we save some time and we get to give pound yen some attention as well. All right, let's start with pound dollar. We'll try to see what the picture is, what the situation is based on classic technicals, support resistance trend lines, Elliott waves, Fibonacci, and then we'll see where within this picture we can find some trading opportunities for midterm, for swing trading or short-term intraday. All right, let's start with pound dollar. Now, there was this setup. Actually, something changed, something quite important changed since last week on pound dollar. I want to signal this trend line break. We were very close to this trend line break, and if you remember, guys, we were looking also at this fib, and I was pointing towards this level, 160.50, 161, okay, as a possible resistance for the week, because I was mentioning last week that I see pound dollar bouncing back and not necessarily closing the week above the 78. Well, it did. It did close the week above, and it's actually confirming based on the trend line, based on the fib, and based on the waves as well. Because right now, well, we're still within the, let's say, the limit of a retracement here. We didn't have a fresh high yet. The high right now is 62.72. The previous high was 63. Just 20 pips on a weekly chart mean nothing. So basically, we retraced the last move down completely. Now, what this means in terms of technicals for now, I'm going to remove this fib as it's no longer relevant. And I'm going to set a very important support line for midterm right here at this triple bottom level. Right now, this becomes our key level for midterm. So basically, since we confirmed the direction long for midterm at this point, let's zoom out a bit, and we have this important triple bottom here. The rainbow will also confirm, but I'll point that out a bit later. We are actually looking midterm for longs on pullbacks towards the top of the rainbow, actually the bulk of the moving averages. Let me zoom in again, right around here. Okay, we're looking for longs somewhere on a pullback with stop beyond the 78% of the current move up. Assuming that we have a top in place now, this is the temporary top in place, our stop will have to be somewhere in the middle range between 100% and 78%. So this would be my stop level. I'll mark it with orange as always. Okay. The challenge would be to find interesting levels for entries in terms of risk to reward. Usually I like entering somewhere within the 25 to 38.2 inside this small corridor right here, and having my stop between 61.8 and 78 if I can. Okay, if the rainbow also agrees. Now in our case now, I'm evaluating whether the stop can be slightly higher towards the 78, and if I do that, how is the rainbow likely to look like at that point? Now, what I'm looking for is, are we going to see a very clear breach of the current bottom of the rainbow? Let's mark the bottom of the rainbow with red lines, the top and the bottom. It's very simple, guys. The top of the rainbow is the highest moving average that I see. Let me zoom in. Right here, the bottom of the rainbow is the lowest moving average within the rainbow formation. I eliminated the reds from this template because sometimes they can be a bit confusing. They are following price very closely, and they don't tend to have so much weight as a technical level. So here we are. This would be our most interesting area, and this is where we would have a long, very well protected by this most likely strong area of support. Okay, so the best risk to reward would be on a pullback towards 150, 160, 159. Now, of course, we might not have that pullback, so we will have to develop this ideal scenario and then a more realistic scenario. No, Mike, no. This is actually the short-term entry system signal. It's the one that you can see on my website as well, tipsandtips.com. It's a short-term trend indicator. It has nothing to do with the chart. It's the same on all charts. It's based on the daily, 4-hour, 1-hour, 30 minutes, and 15 minutes chart. Each chart has a specific weight in calculating the final formula. I'm using it in conjunction with the key levels, which have to do a lot with what you see right now. Basically, these are the key levels, except that on the website they are presented much better, and you can actually see the areas much faster. You don't have to do all this manual analysis, but of course you can do this just as well. Well, since we are in a live session, you guys most likely don't just want the levels themselves. You want to hear the argument behind the setup and, well, compare it with your own systems. This is why we're trying to analyze in depth what's going on. Even though, basically, if I just look right now at this, I know already what my levels are, and I even have a possible setup based on what I see here. Probably we'll see this in the analysis. You see 162.46. Just remember this. We'll see it most likely later on. All right. Now let's see. Based on this, and based on the fact that the 78% is pretty far away from the bottom of the rainbow, I can say that if price hits 78, the bottom of the rainbow will be broken at this point. Now, I'm also considering where the price is at this point and how far is it, what is the tendency right now of the chart, where is the next candle likely to close, above or below the rainbow. I think the probability is very high for a close above, somewhere from 162 to 159 this week. So it's likely that the moving averages will continue to travel up and lifting my stop higher and higher as price retraces here. Of course, if price moves higher, the MAs will travel even faster. So right now, it's safe to assume that we do not need the stop for midterm to be this far away, because basically the moving averages are traveling up, and as you can see, it's the yellow and the green that are right now at the bottom of the rainbow. So these are the ones that will travel the fastest. So it's most likely we're going to see them somewhere above 159 next Tuesday when I have the next session. That's why I think the stop for a midterm position can be somewhere between 61 and 78. Now, I wouldn't push it too far because it's really frustrating to keep a trade, a losing trade, let's say, worst case scenario for so long and then get hit by a spike. You don't want that. You want if you are set for a swing position that you're probably going to check only once every few days, you just want to be confident about your level. So for me personally, beyond 61.8 would be pretty safe because price should not spike below 157.50 at this point. Now 156 seems pretty safe. Why do I say 57.50? Because it's the current level, the current bottom of the rainbow is 57.80. Of course, this is weekly, so probably you can expect some moves below that precise level, but not more than 100 pips away, because that would be a break of the rainbow already. Okay, so for convenience, I'm just going to set 156. It's clearly below the 61. It's pretty far away from the rainbow at minimum of 100 pips, 180 pips in our case, so I think it's comfortable. And most likely, the bottom of the rainbow level is likely to travel up within the next few days. After the weekly close, we're going to see probably the MAs going a bit higher. Now let's see, we're going to do about the same thing on the other time frames, but a bit faster this time. And I'm going to mark the bottom and the top of the rainbow on each chart. It's going to be the same for the daily. I'm going to use the same color. Okay, now I'm using this 57.60. Right now I don't even know if it's relevant to have another line here. But for the top of the rainbow, those of you guys new to the rainbow system, there's no point placing a line here or basically at the highest moving average. The highest moving average is very close to the price. And it's, I think, only about 20 pips above the current price. It really doesn't serve as any resistance yet. It's simply a moving average that travels with price. And this is when I usually have on my live data system the reading open, meaning that on this time frame, the rainbow is open to the upside, and basically we are on a bullish trend, so we're free to follow the rainbow where it goes. So clearly we have a direction. That means we're not interested in this line. We are interested though, we're interested to see where the bottom of this rainbow is, because this is likely to be strong resistance if it corresponds, especially if it corresponds to the weekly level. So far they correspond pretty well. Now you can see that I'm using the same color for weekly and daily because basically it's long term. You can see this level now, which is the top of the rainbow on the weekly. It doesn't look like belonging here on the daily, but it's actually relevant to keep an eye on it. And as you can see, it makes pretty good sense because it's where the bottom of the rainbow is on both weekly and daily. This would be the level, but this is daily, and this would be weekly. So that means this level can be tested, price can drop, not go beyond this point, and come back to resume the bullish trend. That's actually, I think, the best risk to reward. We're probably not going to have anything long for this week long term, but it's good to already signal the possibility, and who knows, maybe if price travels very abruptly to the downside today, we can start going in long. Let's go a bit quicker now on the 4-hour and the other time frames. Let's see where the bottom is here. I'm going to use a different color, white. The bottom is the 200 moving average, a sign that we are in a well-sustained bullish trend on this chart as well. To the upside, as you can see, price is very close to the top, so no level there. It's also open on the hourly, on the 4-hour chart. The 1 hour, this one looks more interesting. Okay, another color. The bottom is again the 200 moving average, and the top seems to be the 60 moving average. Okay, this might be a level of reconfirmation on the hourly. We move forward 30 minutes. Okay, quite interesting. Here you go. Top of the rainbow is right here. Bottom of the rainbow is, in our case right now, I'm marking this 200 moving average. Now, why am I marking this level and not call it open the way we did before? Well, it's basically because this would be the core, the average of the moving averages at this point. And it's because the bottom of the rainbow is usually formed by moving averages larger than 50. So right now, it's only the 5 MA that travels with the price. No other moving average managed to follow price. This means the short-term move was pretty abrupt, but it's not something to be trusted longer term, and it's against the trend, so it's likely to see corrections as well. Corrections that go usually towards the channel of the rainbow between the top and the bottom on this time frame. Let's see the 15 minutes as well, and then we'll look at all of them at the same time. And again, interesting enough, around the same level, and there is no top. Oh, this looks quite interesting. Sorry, there is no bottom of the rainbow on this 15-minute chart. Price again has been dropping abruptly today. All right, now we have the full picture. Let's go back to the 4-hour chart and see all the levels. Now we have a pretty good picture of what's going on. I think the daily is better. Okay, there are 3 levels of resistance right now, all of them around 62.43 and 62.33, and the other one is, yeah, somewhere in between, 62.40. I'm talking about 15 minutes, 30 minutes, 1 hour. Now this would be the first key level to watch towards the upside, okay? A level that might restrict longs for short term. We're gonna go and talk about some scenarios as well. Don't worry, we're not just talking about levels. There will be scenarios as well. This would be a 1 level to watch. And let's see towards the downside. This would be the most immediate target for pound dollar at this time, 61.81. Especially since I don't see anything else short term that might contain price for this retracement. Now, I think the retracement is pretty well confirmed. I doubt that we will see a move. Let's see on the hourly. We already closed below the, yeah, we had already an hourly close below this minor support. I'm not going to draw that support, not to confuse the chart, not to clutter the chart with unnecessary lines. Here you go, 62.14. The close was already 62.04. So we broke the support. And right now, short term, we're looking at downside moves. But do we have an entry? And that's the key element to this system. Knowing where the market is going is one thing, but having a good entry is another. So I think we have a pretty good idea what the market is doing in short term. The system is telling us short 63% is pretty good actually. It's just south of 50%, which means it's confirmed. It's unlikely to change very, very quickly unless price is moving very, very fast right now. And most likely, the system will not change back until price breaks this important level. Okay, now let's see. The first setup that comes into mind today, for me at least, is a short according to the short-term trend bear in an area starting with 162.30. Just don't consider these lines as being precise to the pip. The point would be to have an area, let's say 5 to 10 pips more or less, where you would be interested to start your position. Usually I don't really care so much about 5 pips or 10 pips. It's more the confidence in the in that trade that matters, and the risk to reward. This sort of consideration is not really if I entered at the exact peak or not. Now, if price hits this point, 62.30, 62.40 up to 62.50, okay, and let's write it down. Okay, for short term, I'm looking at a short according to the overall trend in short term, but only if price hits at least a 62.35, let's say 62.30 to 62.50 in this area. Okay, let's see where the stop would be. Now, if this key area of resistance breaks and we go 62.70, at 62.70, even if it's very, very close to the upper line of this entry area, I would already not be interested to continue. Why? Because at that point, the 15-minute chart most likely will show a bullish signal, and this key area, this confluence of levels, will be broken. So I won't be interested in continuing this short because it would be against what the market will be doing at that time. Okay. The most important thing for me right now would be to find a good risk-reward entry somewhere around 62.35, so my stop can be very tight, 65 to 70. Let's say 65, it's still within the retracement zone. If you can afford a bit more, I think 60 to 70 is better, because you know that at that point we have a higher high and the market is not doing what we want it to do. Okay, let's see about our targets. My usual routine is to simply go for the next relevant rainbow level, which in our case 61.80. I add about 5 to 10 pips to that, so let's say 61.88. And we have the first setup of the day. 61.88. Let's analyze a bit what we have in terms of risk to reward. On average, let's say we go in at 40, that would be 30 pips of risk. At 40, we will have about 50 pips of target. That's pretty good. I think it's a pretty good setup. The probability is good enough. Well, I settle for little. 60% or 65% is enough for me. If the risk reward is clearly in my favor, and I'm pretty confident that the timing is right as well for intraday, then it's a trade worth taking. What happens if price doesn't go there? We are just 15 pips away from this area of entry for GU shorts. Now, it's really up to you how you want to balance your risk reward and your entry. Sometimes, if I really want to be into a trade, now this depends on a lot of things. Whether I have a trade on, whether I've done most of my trading for the day, whether I'm happy with what I achieved today or this week, I will evaluate if I really want to get into this trade no matter what. If that's what I want, then I would probably feather in about half or 1/3 of my exposure, even at this point at 62.15. Okay? It's not the right level and it's not the best risk reward. Because as you can see, if you enter at 15 instead of 30, your risk will be substantially higher, something like 55 pips. You can't really, technically, you can't put your stop much lower than this. And your target, well, maybe you can drop it to 61.83, but it's not going to make much of a difference. Your risk reward is not going to be good. Okay? Yes, the market is dropping, so let's say you are really confident that it will continue to drop. One more thing to look at, check the clock. Okay? It's 2:30 my time. That's about it's within the time zone when I don't want to go in. It's a period of about 2 hours, starting around now, a half hour ago, and going another maybe 1 hour, 1 hour and a half. It's that that moment when the market is balancing between the London session direction and the US session direction, possibly a change in direction. And the change in direction is definitely not in our favor. We do not want a change in direction. We only want some profit taking, and followed by a re-entry of the bears into the game that would drive our trade lower. We don't want something serious happening towards the upside, at least not from the perspective of this trade. That's why the timing, I don't think is right. And frankly, if I'm not desperate to enter a position now, maybe when you really want to take a trade, you haven't traded for days, you're just looking desperately to go into a trade to make your pips. But if you're not in that situation, most likely it's a better idea to wait and get the right risk to reward. And if you don't get this trade, well, so be it. There will be another one and another one and another one. You missing an opportunity or missing a setup is a bit of a waste of time, maybe wasting maybe 10 or 20 minutes of your time, but it's not going to be a waste of money directly. And I think it's more important when you go into the trade to be well confirmed and to have the trade on your terms, not on their terms. Okay? The only way to make sure this is happening is choosing your levels. Okay? This is our freedom in the market. We do not determine the course of price, but we do determine directly and fully our levels of entry, stop, target, trade management, everything related to our own levels, our responsibility, and we can do something about it. And this is, I think, one of our biggest edges in the market. Now, what are we going to do about that long direction I was talking about earlier to finish with this GU? What about midterm? Well, midterm, we're clearly long. I mean, I'm looking at 1 hour bullish. As you can see, we're inside a bullish rainbow. 4 hour bullish rainbow, strong bullish rainbow. But check out the distance between the top and the bottom at this point. We're looking at 300 pips. 300 pips on a 4-hour chart is a bit too much. That means within a relatively short period of time of maybe 2 weeks. Let's see. It's a bit more than 2 weeks since it broke out. It's more of, it's 3 weeks time. It traveled a really large area of about 400 or 500 pips. Well, 400 or 500 pips is a move where you can expect some pullbacks. Okay. If the pullback has not started, you can still manage that by trading on a small 15-minute chart in the direction of the active trend. But right now, this active trend is temporarily deactivated by the fact that price breached this rainbow zone. So we're not into that bullish fever anymore. We have a top. Okay, we have a resistance line. I'm just gonna show it, not gonna mark it on the chart because it will confuse the rainbow levels. So 62.50, 62.60, and the hourly closed below the small support at 62.30. So there's something going on, and it's just not safe and definitely not good in terms of risk reward to just go in at any level. Okay, this would be along with target maybe in the 165, 166 area. That's only 400 pips away. I'm saying only because we traveled more than that since we broke out. And the daily is showing the exact same pattern I was mentioning on the 4-hour chart. Strong breakout without price making a comeback inside the rainbow. Price is not even close to the yellow zone. That means there was no retracement. Okay? Yes, you are confirmed. Yes, it's bullish and it's long. It's confirmed. We know that. But we don't have an entry. We only have a confirmation of a bearish direction at this time. Nothing more. So for midterm, and I will end with this. I simply have to give a possible setup, which we will analyze probably next week. I see a long at level starting with 6180. That would be the absolute minimum, and that would be really, again, price wouldn't even be in the retracement zone. It's the 160, the 161. That would be the comeback towards the broken trend line. 161, and let's see. The first important rainbow level will be 159.71, 159, let's say 59.90. And the stop, well, that's the good part. We have a pretty good and solid stop at 156, and you would be targeting the 166 area. All right. Now, everything is okay, except that, well, as you can see, it makes a very big difference if you're entering at 161, and you would be going for a risk to reward of 1-to-1, 500 pips target, 500 pips stop. But if you're going at 160, that ratio changes to 1.5, because you would be risking 400 and going for 600. Of course, the money management makes the difference in the end. And you're not just going to put all your money into one trade and just leave it like that. Probably you're going to scale in as price drops towards the target of 159. And as price confirms you and breaks through after the retracement, you might be tempted to add to the position when the market proves you right. Remember, guys, with this sort of setups, well, you do not know, of course, if you are right or wrong, but the market gives you certain checkpoints, especially for midterm. You know more or less at some point that you are right and you are on the right track, and that means you can insist into trading that setup, maybe add to it. And if things don't work out, well, it's pretty easy to know, because your levels will look very strange, and that's the time to maybe slowly trying to get out. Definitely not add. Just make your exit as discreetly as possible, and well, take it as a necessary loss, and that's it. I think that's pretty much what I have to say about GU for short term and mid term. Any questions, guys, so far? Yes, Dan. As always, oh, that's an interesting one. Okay, we didn't have any time for the Elliott Wave count. Now, what's happening Elliott Wave wise? All right, let's zoom out. Now, Dan, I'm looking at this chart. I zoomed out a lot here because I don't know exactly where I am, and I want to start my wave count. Well, my count for GU was actually bearish long term. 3 of 3, you mean? 3 of 3. 1, 2, 3, and 1, 2, 3. I think you see the count something like this. Let me just quickly mark it for everyone to see. Now this would be your bigger 1 to 3. Okay. And this recent low, oh, I think you're talking shorter term, right? I'm going a bit too far here. Most likely we're not interested in trading such big waves anyway. Let's go on daily. From recent low, this will be the recent low, and this will be 1, 2, indeed wave 3. It looks very much like a wave 3 then. It has that volatility, that momentum that you would expect from a wave 3. So when you said 3, I was already thinking about something like that, because it looks like it's uninterrupted, strong price action, reminding of the wave 3 dynamic. That's for sure. I'm a little bit confused overall by the GU count. Yeah, and that again would be in line with what I would expect, because it looks to me here that we have a perfect resistance at exactly 62.70. Okay, this looks like a perfect resistance, the absolute top of everything. That's exactly why I would think otherwise. It might be a top, a temporary top, but not as large and not as important as it looks like. And yes, indeed, I would say the same thing. Once we have a pullback here, oh, I think I see your wave 3. I think I see exactly what you mean. Now this would be the bigger 1, 2, 3, 4, 5, if I'm not mistaken. Dan, let me know if this is what you see. And thanks for asking about the waves, because I think we might have something interesting to point out. All right, and this would be your wave 3 inside right here. So you're looking at 1, the one that broke the rainbow. Let me zoom in. The one that broke the rainbow, pull back, strong move to the upside, wave 3, okay, of a bigger 3, which is the red, and now we're pulling back again. And then let's think about this in terms of the rule of alternation. What happens if this is indeed a wave 2 right here? Is this the one you're referring to? By the way, look at how the rainbow pointed out what was going on by a breakout and the comeback to touch the yellow zone. Okay, this is actually an entry point, because this would be your protection zone. So you get really close to the protection zone. This is where definitely my system was bullish. Okay, and the risk to reward is something that my system cannot evaluate by itself. This is something you have to see for yourself, that the area of protection is very close, and your stop right here at 156 is a really good deal, and it's worth taking the move with stop right behind this area. All right, then what sort of retracement are we expecting now? My guess would be the drop might be bigger than 100 pips. I think we should see something bigger than this, and maybe more elaborate, and possibly with some choppiness, and maybe looking a bit like a flat wave. Let me just draw something here. Something like this. I would expect something like this to happen. This would be in line with what I see overall. And judging by this very small pullback here. Okay. 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 We're in leg C right now. Once completed, minor wave A. But again, then I think it's pretty longer term, this view. I want to go into it, but I only have 5 minutes left from the session, and I don't want to start something I cannot finish. I think shorter term, we're more interested in this small daily formation, because it would be relevant for these two setups that we just mentioned. In any case, I think it's pretty much coherent with what we noticed on the rainbow, wouldn't you say? It looks pretty much like that, like a bearish temporary short-term bearish move a retracement that would last for a few days, that would drive price to a better level for a long midterm. So I think to sum it up easily for us today, I think we're looking at two things really. The short term, which is a bearish confirmed move with a specific area of limitation, which is 60 to 70. I wouldn't go anywhere beyond that, because once it breaks this point, I know that I suddenly remember I am on a very strong bullish wave. And if that bullish wave is not dead, then we can easily see 163, 163.20. That's not what I want to do if I'm into a trade short term. So I do not want to get stopped out with 60 pips of loss when I can very well take 30 pips loss. Okay? So this would be a very restricted, clear setup to follow for short term. If it works out this precise way, then I would be interested to go in. If it doesn't, then I'll just leave it and see if I get more clues later on. It doesn't conflict at all with the midterm long. On the contrary, it's basically the preparation for this midterm setup, which starts right where the first short-term setup ends. So they come in this sequence: short-term short, midterm long. I would be more, as always, I would be more confident in taking the long somewhere around 160, 159. I would be more comfortable, even if you are trading short-term. Sometimes I'm cheating a little bit, guys. I am taking a midterm trade with a midterm stop, and then I keep going in and out in the same direction as I originally planned, but short-term. Let's say if the market drops to 150, 160, I take long, I close around 60, 80, I take it again long at 60, 50, close it again at 61, re-enter at 60, 80 or 60, 90, add and keep going back and forth, but always long, okay? Following the bigger direction all the time, okay? But using the 15 minutes to go in and out. It depends on how much time I have for trading. If I don't have time, I simply take the long term and just leave it like that, and I'm happy. But if I have the whole morning, for instance, for trading, well, why not? You check the short term, you keep the longer term direction, and you manage trade according to that, and use short term charts, 5 minutes, 15 minutes, to time your entries a little bit better. It's the advantage of the intraday trader as compared to the midterm swing trader who just sets the trades, sets the levels, and then leaves the chart. All right. Hope this is clear enough. If you have any questions, guys, let me know. I'll move to GJ very, very quickly. Marking the levels. In 5 minutes, we should be done with all this. All right. Top of the rainbow, bottom of the rainbow on weekly. Bottom of the rainbow. Top of the rainbow on daily. Now, why do I use this as top? I do not want to go into the yellow, because basically the yellow is not an area that forms a resistance. All the moving averages are one on top of the other. They are not forming a resistance area, and they are in the right order, you see, from the smaller to the higher to the larger. So it's not, while they are in a fan, I'm not interested in using them as a support resistance area. While, as you can see here, the moving averages are hard to identify, so they already form, it's like a layer of protection. Okay, moving forward for our chart, bottom of the rainbow about the same line. I love it when this happens. These have a really high probability of working at solid level. You see, when the two time frames agree. All right, 1 hour chart. Here you go. It has something like a resistance here. Let's mark it just in case. 30 minutes. My objective is to identify areas of convergence when these levels tend to be around the same level, 5 or 10 pips more or less. And finally 15. Well, I think we have something for GJ as well. Hey, sorry. There you go. All right. We're close to the bottom of the rainbow now. As you can see, there's an area of resistance between 28.13 and 28.26. So this would be the area we're interested in right now for confirming long. So I would say for short term, this will be orange. For longs, I would look for entries around here when clearly this area of resistance is taken out and price comes back to the trend before. Okay, as you can see, the trend right now is 24%. That's flat, so no direction for now. As for shorts, well, shorts would be interested around the same level if it fails, if price fails to break through. So I would say short in this area, but not higher than 28.30. So I think this would be the pivotal area for short-term direction. Long above 128.50, short below 128.20. Target would be 127.50, the first target, and then well, if the retracement continues, you have 126.70. Okay. Overall, of course, you can see that the red lines and the white lines are down here. So the picture is very much like a GU at this time. Long midterm, when price goes sufficiently towards your support zone. And I'm quite sure that this support zone will move slightly higher and converge towards 125. But we are still at 127, almost 128. So I don't think the risk to reward is good enough at this time. Hold on. Right. On the weekly chart, I don't want to venture any idea at this point. We're still inside this area of consolidation. You can see the trend line. Price is right inside this area. So there isn't a very clear signal long term. And I'm not interested in trading GJ long term. So I won't point out any long term setup. Simply a short term would be short around 128.20, not higher than 128.30. Okay, targeting 127.60 and 126.70. Okay, just taking each level at a time. And if the breakout is serious and this 128.30 level gives in, I would start going in the direction of the trend once price hits 128.50, and at the time you will see that this will become a support area, so you can actually reverse quite confidently with support right below the cluster of the cluster of moving averages, 128.20, 128. All right, any questions about GJ, guys? I have to wrap it up here. A bit over my time already. Thank you, Dan, for pointing out the waves. It's actually interesting because I did in the morning a very short analysis based on the rainbow, but I forgot to see what the waves have to say and if there's anything there. So you gave me the chance to look over that perspective as well. All right. Just give you guys my email address if you have any questions. Oh, hold on. and this will be the website address if you want to see the live data system at work live this week on pound Swiss. You will actually see the short-term signal, the levels, and trend directions for each time frame. So just to see how how it works as a system. Really, Dan, you wrote to what email address? I'm not sure. Just 1 second. I'll give you another email address, personal one. I'll communicate it to you in private. All right. Thank you guys for attending, and I'll see you next Tuesday, same time. For any questions that I couldn't answer now, just email me or we can get in touch through my website. Oh, you did? I'll private message you right now, Dan. Okay? I have a filter for spam that sometimes behaves a bit strangely, and if I didn't answer you at all, that means most likely it was caught in that filter. All right? Thanks again for today, guys. Have a great end of week. I'll see you next Tuesday.